Welcome to the Evolution of a Property Business podcast, brought to you by Sam Watterson.
Hey everybody, and welcome to another episode of the Evolution of a Property Business podcast with me, your host, Sam Watterson. I'm joined today by Sarah Flynn, who is a professional property investor in Yorkshire and is also the host of the York Property Breakfast. Welcome, Sarah. Thank you for joining me. If you'd like to give me a quick intro.
Yeah, thank you, Sam. So thank you very much for having me on the show. An absolute pleasure to be here. So an intro to me, well, my life probably was very, very different about 6 or 7 years ago to what it is today. Definitely didn't think I would be podcasting all over the world and getting articles written about me and all sorts of weird and wonderful things. I was very happy sat in Lloyd's Banking Group, doing my own thing. I had a very well paid job. I had done lots of different roles, in fact, but I wound up doing project management of all things for the PPI scandal, if anybody remembers that in the UK, which was quite boring. But I was happy with it at the time. And I thought that my destiny was paved, I think, really, at Lloyd's. I was well liked, I was well respected, and I sort of moved quite seamlessly every few years through various promotions. So my life was kind of set, I suppose, in that way. And then the enormous gaping hole in my life happened, which was the tragedy of my brother passing. So that was in 2016. He sadly got cancer in the middle of 2015, and just through a series of unfortunate circumstances, he passed away. And that obviously completely turned my life upside down, as I'm sure you can appreciate. So it put me on a completely different road, and into some real inner turmoil, and it made me begin to question my whole life, what I'd done, what was the purpose of life, why was I here, what was I doing sat at Lloyd's Banking Group, was it my purpose, is it what I wanted to do? And I took a long time out on sick, and I went traveling for quite a while around Thailand, and I just decided that for whatever reason, the path that I was on was no longer for me. So I came home, and in short, I quit work on a bit of a whim. Whether that was brave or stupid, I'm not sure at the time, but I think hopefully it was brave. It's all worked out okay now. And I just took some time for me to try and understand what it was that I wanted to do, and where my direction of travel should be for the remainder of my life. So then what happened in that time is what I like to call the property signs. And what I mean by that is that I think nobody sets out to be a property investor. So you don't hear your children of like 3 or 4 years all going, oh, mummy, daddy, when I grow up, I really want to be a property investor. Like, that's not something that I've ever heard any child say. So I think through a series of things, the property signs come to everybody that's a true property investor, and they go from having the 9-to-5 job, as I did, to being sat in the pants at 3 p.m. watching Homes Under the Hammer. And I think that from there, you then start to think, oh, this looks like quite a good thing. This looks quite interesting. If other people can do it, maybe I can do it. And then I found out that my granddad had also done property on the side of his business all his life. And so I started to ask him some questions about that, and became quite inquisitive through kind of his journey into property. And lots of property related things basically started to come to my doorstep. And I then, through all these events, I suppose, started to think, maybe property is for me, maybe this is my life and my journey. So that, I suppose, in short, is kind of what happened. That's how I got into property. And I'm sure we'll talk in more detail about where I am now. But lots of weird and wonderful things have happened to me since then. But I am now very firmly in the property camp.
So is it fair to say you were another victim of the Homes Under the Hammer curse?
I think yes. Yeah, I think so. Unfortunately, I am victim to that. I think most people are. That's how it starts. And you start watching Homes Under the Hammer. You see these people that are doing these crazy things with property, and they're allegedly making this enormous profit. And you think, yeah, I'll have a dabble at that. But I also think that property is very strange in the fact that it's the only place in the world where people, or industry in the world rather, where people just decide to have a go. So if you think about anything else, like if you were a brain surgeon, for example, that's what you wanted to be, you wouldn't wake up and go, I know, I'll just chop the top of someone's head off and I'll see how that goes.
Yeah.
And yet we have this strange culture in the UK where people, quite seemingly, including myself, get up one day and go, oh, I'll just have a bash at that and see how it transpires. And then it either goes horribly wrong, or you kind of muddle through like we did. And then you realize that you probably need to get educated, and you go and get some education.
I think I've always thought this as well, that one thing I like about when I'm explaining property investing to people, whether they be clients or raising money, is like everybody understands what a property is because we all live in one. And I think everyone understands the basic premise of adding value. And because they live in a house, they might have refurbished a spare bedroom or put a new kitchen in. They've probably been through that process. So it's almost like they've had a little bit of schooling into the basics, and then it's just connecting that with monetizing it. And like you say, they either then do it horribly wrong and quit and never do it ever again, or they decide to make a proper business out of it and give it a go. So I made some notes when you were chatting then. It's really, really sad, and I'm sorry to hear that you lost your brother. I can't imagine what you went through. What do you think was the biggest mindset shift because of that experience that made you sort of go for a new direction?
Yeah, I think that's a really great question, Sam. I think, in truth, when a lot of people ask me, I've got so used to speaking about it, I probably kind of gloss over the dark days in a way. But I think the mindset thing was enormous for me. And the trigger was really becoming abundantly aware of my own mortality. So I was sat in the room when my brother died and all the awful stuff that you never think is going to happen to you. And I think that it just gave me a profound realization that I think probably you can only experience through severe trauma in truth, that, you are only here once. And that realization, was so profound when I was like watching death before my eyes, that it's something you can't unsee, and it changed me inside forever. I'm genuinely a completely different person, in many aspects from the person I probably was when I was just, trundling on doing my 9 to 5, kind of enjoying my life. I think the other thing that was coupled with that, and I was probably, lucky in a sense, and you might say, Sarah, why were you lucky when you lost your 19-year-old brother? But I feel lucky because I took the best out of a bad experience, and I don't think everybody has the same experience that I did. And for me, I suppose it ignited something in me. Despite kind of all the hurt and the trauma and the grief and the pain, it simultaneously ignited something inside me, this burning desire to want to be the best person that I could be, to understand what my purpose was, to enjoy life, to kind of deal with that mortality piece, in the sense that people don't want to think about, that, well, I'll put it off to another day. I really want to do that, but does it really matter today? Because, I've got ages and I've got forever. And I just kind of saw that you definitely don't have forever. Like, we're on this planet for such a short space of time. And my brother's a great example of somebody who was on the planet way shorter than he ever should have been, to have 19 years of your life, and then that's it, and he was really just getting started. And I think that again was another really strong property link for me at the time, because he worked as an electrician and he was always really hands-on with obviously with his work doing the electric stuff, and he was always going in properties and he was telling me about these amazing properties that he'd been in and seen, because he was contracted to do some enormous work on really big multi-million-pound houses, and he was always really interested in investing from a very, very young age. And I just never understood that piece when I was the same age as him. And he would always sit and say to me like, oh, I'm going to make my millions doing this, and we're going to get property. And, and he was really interested in stocks and shares, and he would always be trading and doing all these things that at the time I just had absolutely no idea, or in truth interest about, to be honest. I just thought it was nuts. I'd very much been taught, from our own parents, to lead the 9 to 5 life, have a really sturdy job, don't deviate from it, be good to your employer, all the classic stuff. So why he thought differently, I don't know, or where he'd got all this stuff from. Maybe he was just slightly younger than I was and very into YouTube, and he understood lots of different things that I just didn't at that time. And I think after his passing, like I say, it sort of ignited this burning desire in me. And at the same time, I started to think about all these things that he'd said to me, so I'm going to, I really want to invest and I want to create wealth over time. And actually, when I had this time out, when I quit work, I started to think, well, what is that? What are all these things that he was talking about? So I sort of went on this journey of exploration in a way to understand what those things meant, if that makes sense.
Sounds like he inspired you. And, the thing I would say is the experience for me from listening to you talk sounds like it anchored your gratitude. It
Massively.
made you grateful for things, and it made you be able to quantify them. Almost as the phrase, life's too short.
Mm-hmm.
Life's too short. Do I want to be doing this job? Is there something better out there? My brother's been talking about all this. Let's explore it.
Yeah, absolutely. And that was really how all those things then came together, because, I started to explore it. Then, as I say, I started to think about how property, could work more serious for me in life, sort of as an aside. When my brother was ill, my parents, just before he fell ill, had bought a property just in our local area with a view of doing it up to sell on for profit, just as a bit of a sideline for retirement. So we also were then trying to do this house while I wasn't at work. So the property just seemed to be everywhere. And then I thought, I want to find a way to bring kind of my brother and his legacy and his memory and everything that he wanted to build up. I thought I wanted to bring that back together, really, with property and with something that I could create in his honor, really. And that is how KAF Properties was born. And our initials in the title of our business are his initials, because we wanted to make sure that he was still alive and as part of our family. And that's how the family business started, really.
Part of the legacy. So what was the first property venture? Was it this property your parents bought? Did you get involved in that one?
Yes. So they obviously bought this property, and just as a horrible twist of fate would have it as ever, the property completed through the solicitors, and they got the keys the same day that my brother got diagnosed with cancer. So obviously that then became like so far removed from everyone's minds. It really was just like, well, we'll deal with that at a much later date when this situation has resolved itself. So it just got left, really. And then because my brother was in and out of hospital, but predominantly in, to be honest, throughout the 7 months that he was ill. So we were there pretty much all the time. And when he was out, my dad would sort of try to go and do some bits, but in truth, nothing ever really got done. He'd take a radiator off, but then he'd be back at the hospital, and nothing really moved forward. And then obviously when he passed, everyone was sort of sat there thinking, like, oh, what we're going to do now? Like, we're also sat with this property that we've been paying a mortgage on for like 7 months. We've not even started it. And because obviously I wasn't working, I was in a position, and my parents definitely weren't working then. My mum was off on long-term sick, and my dad had been made redundant the day after my brother died. So really none of us were in work. So we decided that together we were going to try and do this property up between ourselves as much as we could. I mean, obviously there's some things we can't do, like no one's a plasterer, for example. So we got the wall skimmed, but like my dad's quite hands-on. So he was like fitting the new kitchen and the bathroom and all those sorts of things. And me and my mum were, decorating and designing the house. And there was a lot of value in those early days, to be honest. That also really cemented, I think, that property was for me, because it almost became like the new thing that would bring us all together after Kyle's death.
Awesome.
And that was really important, like through those tough times, like we'd be sat in the house painting 1 minute, crying on the floor, then, and it was like this whole process and journey that we had to go through together, and all of that kind of happened in this house, really. But it also made me really learn about property. Like there's no other way to learn than like physically doing it yourself. And I learned so much in that first property. And then we didn't know what to do, because my parents were not putting it on the market. They had added significant value. I think it cost them about 112,000 to buy. They spent about 20 grand on the refurb. And it was about 150, 160,000 once it had done up. So they created like 30,000+ pounds worth of equity in this property, and their plan was just to sell it, and maybe move on and do another one if they felt that they wanted to, but it was just a bit of extra cash. But then simultaneously, me and my wife were looking for somewhere to live. And this house was like round the corner from where we were, and we were trying to get on the property ladder because we'd been renting. So we actually ended up buying the property off my parents, in a real weird turn of events. So they got the profit, we got somewhere to live. But it was like our first flip, in essence, that I ended up buying. But I learned so much from that process, just all the intricacies of how a house is built and what's inside it and the brickwork. And I mean, just stuff that I never had a clue about, as you say, that you just sort of, you buy a house and you live in it and that's the roof over your head. And that was all I ever knew until that point.
And there's some really good lessons there if anyone didn't pick those up. And that is about leverage. So when you're first starting out, you've got to try and leverage as much as you can. And one of the things you can leverage when you're new to property, if you don't have a lot of money, is your own time. Whether it be time that you've got because you're not working, or time that you can steal around your job because you've got the energy, because you're enthusiastic and you want to give it a go. But doing the work yourself is a great way of doing that. That's how I got started. So or should I say, Sarah has leveraged her time and her family's time and their expertise to together add the value to the house. And then she's leveraged herself again by selling the property back to herself. But what she's done is she's leveraged the fact that her and her wife needed somewhere to live. So it wasn't like they just bought it and thought, right, what do we do with it now? They kind of solved a problem and, created profit. So there's some really good lessons there about how you can leverage your situation sometimes to give yourself an advantage. So am I right in thinking that following on from that property, you guys thought that flipping properties might be a good strategy to?
Yes. And this is the part of the story where I would say we muddled through. We always made profit, and we were very, I say lucky. I mean, I did have some market knowledge, but in truth, the only thing I understood was that you could buy a house that was like maybe a deceased estate, or it was very run down. You could titivate it and sell it on, and that was kind of what I understood. I knew that you could do rentals. I had absolutely no idea about them. And really at that time, no focus in my mind that would be what I wanted to do. I just kind of naively, I suppose, thought, okay, that worked really well. I could see how that worked. And we knew the local area and the surrounding areas very well, and we knew the market was strong. So the loose strategy at that point was, okay, let's keep buying houses that are distressed, doing them up, selling them on, and we will just reap the rewards from the profit, and we will just run like a trading flip business.
Yeah.
And it was really simple, very cookie cutter approach, like 2 or 3 bed semi-detached or terrace. We knew roughly what the cost would be to do it. And we very much continued down this, what I would call hybrid model. So we would partly do the work ourselves, partly get builders in, or tradesmen if we couldn't do, the bits that needed doing, and just to try and save the cost and, be a bit more realistic in those early days. We did the numbers loosely, I'll be honest. Probably nowhere near to the degree that I do things now with my 2 million spreadsheets and intricate macros and formulas and things. But, I roughly knew it was going to work. I knew we'd make some profit from it. And off we went. So that's what we did. And I think we probably did 6, maybe more flips in the space of about 18 months, 2 years.
Wow.
Yeah, in the local area, just places we knew, what we knew things were coming up. And because it was the local area, I already knew quite a lot of the estate agents quite well, or we'd used them before for other bits of work. So I'd got to know the estate agents quite well. And that was really helpful, because then when they knew that we were looking for stuff, they started to call us. And I kind of started then to understand that networking piece, about how to sort of leverage your network, keep relationships and use that piece going forward. And that worked to a degree. And as I said, we were always profitable. What I'd not understood, which comes back to this kind of whole point of education that I was talking about at the start, is that I just had total lack of understanding really of the UK economy and the UK property market.
Right.
So if you think back to between 2016 to sort of late 2018, early 2019, what was going on then? Well, Brexit was literally all over everybody's TV, morning, noon and night. You know, everyone was fighting it out because we were going to leave the EU. And I just didn't get that situation and the wider economy was having like quite an adverse effect on the property market. So we were in this funny situation where we were doing houses and they would either sell within a week and there was 20 viewers, or they were sat on the market for 6, 7, 8 months and they wouldn't go anywhere. And they always sold eventually and we always made profit, but time is money and we were obviously losing money. Not that I really understood that then, but through the period of time, you know, that it'd been sat on the market. So it very much felt like this strange feast or famine situation where either a couple of properties had sold at once. I thought it was my heyday because it's more money than I'd ever earned working at Lloyd's. But then I had like 7 or 8 months of like living off this money thinking, okay, where's the next money coming from? And I just not understood this piece about cash flow, which I'm sure we'll come on to. But really, that's how the flips kind of materialized for us.
So you started off with flips, and then you kind of started to think more about cash flow. Was that because properties were sticking on the market? You weren't making as much as you thought you were? You know, it's interesting what you say, because when I bought my first few houses, I didn't do any kind of analysis. I'm very much, if I jump in a river, I'll learn how to swim. So I was like, if I buy a house and I do it up, it'll work. I don't need to overanalyze it, talk myself out of it. It will just work, and I'll learn stuff along the way, which means the next time I do it, it'll work even better and even better and even better, and kind of go on your instincts. So at that point, was that when you decided to invest in more formal education?
Yes, yeah, absolutely. So sort of late 2018, I started to get to this realization that maybe flips alone weren't really going to work for me. And then probably simultaneously, what started to happen, which is probably what happens to most people, is you start Googling like, okay, what else can I do apart from flips? And then you're flooded with all these free seminars that are 10 minutes from your house. So I reluctantly went, and I do say reluctantly, because I'll be honest with you, the idiot in me, you know, coming back to this thing about, you know, everybody thinks they can have a go at property. The idiot in me was like, well, what could they possibly teach me? Which is so funny when I say that out loud with hindsight. What could they possibly teach me that I don't already know? And after about 4 attempts of me allegedly going to this thing and then just not turning up in sort of early 2019, I thought, okay, Sarah, you are going to have to go to this. And my mum kind of forced me to it. She was like, look, stop being silly, stop being pig-headed. I think, you know, you will learn something. Let's just go together. And in a hilarious turn of events, within the 2 hours, I'd signed up for every training package you could ever imagine. And I was fully immersed in the training property culture. And that's really then how my world and my mind, of course, was completely open to the fact that flips definitely were not just the way to go.
So there'll be people listening to this who might not have done any property training, who might not believe in property training, who might think it's a bit of a scam. You know, every time in one of the buy-to-let groups on Facebook, somebody talks about training, there's lots of people who haven't done training giving advice. So as someone who's done training and, you know, done several courses, do you think it proved a valuable experience?
Yes. And I think that that's a really interesting question, because I think that my answer is a little bit twofold. And what I mean by that is, if you are really happy in your job, or you've got a different business and you're doing it full time, and in your mind you understand that you might want a longer term retirement package or just a little bit of surplus income, and you just want 3 or 4 buy-to-lets that are going to tide you over for the rest of your life, then my advice is probably don't get property educated. Like, you can get through, you can learn from other people, you can quite happily pay for lots of private mentors now, which are wage, you know, maybe just a couple of hours session to understand the mechanics of a buy-to-let mortgage and what you would need. And I think that's sort of a different angle. I think for somebody that seriously wants to do property full time, I think it is a must. I really do think I think it's so important that you understand the different strategies that are out there, the way that you can you know deploy, I suppose, different exits if things go wrong, so you're not stuck all the time. The knowledge also of just being in a very high level network with lots of other individuals who have been there, done that, seen it, they understand, they can offer the support and advice. And really just to fast track that process. I went from knowing nothing to, in the space of about 6 months, I could tell you everything from a simple buy to let right up to a multi-million-pound commercial unit, and where else can you get that level of training without it taking years and years and years and years, of speaking to people. Your business, to me, will never progress at a decent rate that you'd like it to if you are trying to build a portfolio without any other training or knowledge. It's just my opinion. Like it works so well for me. But I think that what's also coupled with that is it has to come from you. So lots of people, I think, who go to property training groups, and don't get me wrong, Sam, there are good and bad ones out there. And I think that that's really important that you speak to other people to get advice on decent ones and ones that are legitimate, because there are scams out there. I've been scammed myself years ago and it was an awful experience. So I think that you have to make sure that you're choosing the right one, and that just comes from recommendations. But I think to actually be educated is really important. But the thing that sits behind that is that ultimately you can get all the information in the world, but it has to come from you. Like ultimately the doing of the do, if that makes sense. And I think lots of people lose the way there. That's where I see a lot of people early on in the property journey get very annoyed and bored because they've reached a point where they're like, oh, I've paid 20-30 grand for all this, and yet it's not materialized for me. And I'm like, what have you actually done with it? What did you do with that knowledge? Oh, well, nothing. I just expected it all to come to me. Like, that's just information. You still have to go out and do the work. And I think sometimes that's the gap that people miss.
Yeah. The point you were making then about if somebody just wants 4 buy-to-lets, do you not think that if they went and did some property training, it might open their eyes, and they probably think that's all that's possible? And if you open their eyes, they might all of a sudden think, well, actually, hang on, there's another way of doing this. And they might change their sort of strategies and the way they think about it.
Yeah, I definitely think there's an argument to be had about that, to be honest, because I suppose, like you say, it's you only know what you know. And if you don't know, but I think probably more the point I was making is, like, I've met with some people this week who were very much, who were investors who wanted to invest in our business, but they were very much of the mindset of like, property is just not, it's not for me, like I buy and sell businesses. It's not what I want to do, but I would like to be involved in it in maybe a different way or in a very low capacity. And I think that is different from the point of view that if someone is very definite that that's just not their path for life, like, don't waste loads of money, unnecessarily. It's a bit like me saying, oh, I don't know, really, really want to be a carpet fitter, so I'm going to go on a carpet fitter, but I don't want to do that. Or, it's not what I want. So I think if you know in your own mind kind of what that is, but I think if you're unsure and you think the property might be for you and it's just because you don't understand, then you should definitely invest in it, because like you said, the doors that can be opened from that are enormous.
And I've always found as well with property training, it's not so much what I learn, because without being pig-headed, I know most of it anyway, from learning the hard way, from spending 10 years, figuring it out for myself. What I should have done was property training 10 years ago, and I'd have been miles ahead. But I already know a lot of the stuff, and I find there's so much value in one, validation, where somebody who's qualified and experienced stands in front of a room and says, this is how you do it. And you go, well, I had that idea, but I didn't know enough to push it through. They've validated that now, so I'm going to go ahead and do that. And I think the most important thing for me is it's the network and the family. Like with me, when I decided that property was going to be for me full time for the rest of my life, I realized that my friends and my family were probably not going to be that interested and might ask me out of politeness. But in reality, I needed to surround myself with people who'd also made that same commitment, that they were going to be property geeks until they retired or past retirement. So for me, joining a training company was also joining the community of people who you share things from. And I find so much value in the Facebook groups where you see someone doing something and you think, well, I want to do that, and you learn a bit more about that. and then you see an example of someone who's building a portfolio, and then you think back to the training you've done and how you can apply different bits. And so it helps you to take the training and connect it to the outcome, which I think is more motivating when it comes to actually taking action that's going to give you the results in the future.
Yeah, enormously. I completely agree with all those points, and it is that thing about community, because, as anybody who's listening to this, who's already in property full time will know, or even if you're just doing it on the side, it is one of the most isolated industries. It's a very much a solo affair. Like, if you want to build a property portfolio, that's on you. No one else is going to help you. You don't start employing other people. Well, you might eventually if it was big, but generally speaking, it is just you doing the work. And I completely agree with you. The truth is, nobody else really cares. Unless you are in like a really big, like you say, community like that, where you can see other people doing it and you don't feel so alone. And I just think that's so important, because it's so easy to feel very cut off. And like nobody else understands how you feel, because, I think particularly in property, one of the things that can feel crippling unless you learn to manage it is the level of money involved.
Yeah.
So it's not like, you're selling milk and you've missed 3 milk deliveries, so you're going to lose £10. Very quickly, what can seem like a good project or seem like a good idea can suddenly go to being a really bad one really quickly, and you're completely in the shit, excuse my French, and you need help, and you don't want to, and I'm sure everybody listening has felt like that when something's not going quite right. And we've had an example of it recently where we had build costs that were meant to be £100,000. The builder then came back 6 months later when we'd bought the property and said, oh, now they're £180,000, and that's a frightening place to be, to think, okay, what do I do now? I'm sat on my own. Where do I find this other £80,000 from? Do I find it? Are there other options? How do I get? And I think that just to be in a community with lots of other investors who are knowledgeable and understand that, to pick up the phone and for somebody else to understand that level of stress and emotion that comes with that, I think is just not the same as speaking to your friends or your family who in truth don't really understand what you're going through.
Yeah, no, definitely. So armed with all your newfound property knowledge and experience, what angle did your investing take? And I guess it's a double-barreled question, this one. The other part of the question is, what strategies have you been using since then?
Okay. So I think just on a more broad outlook, in terms of the whole angle of my investment life as I see it going forward, I very much wanted to, as I said, take this idea that Kyle had started to tell me, that my brother was talking about, about getting property as a foundation, branching out into then, other more risky assets. And I've gone on a journey in the last sort of 18 months in lockdown. I had a mentor for quite a while that taught me lots and lots about stocks and shares and gold and commodities and all sorts of interesting things that I knew nothing about. And the purpose of that really was because to me that is how I see my progression, building and expanding my property portfolio, probably some more residential, maybe move on into some commercial stuff as well, and really building a substantial portfolio, it really is generational wealth now. I've got one child, another one on the way, and to me, it's all about that, building that very different lifestyle from my family to anything that anybody's had before in our previous generations, for them to be comfortable, for them to have security, for them to have wealth over time. And I think that coupled with that in the background, to me, would then be some probably higher risk investments and more speculative investments. So, things like having some index tracker funds in the background and maybe buying some gold and some more speculative investments on growth stocks and things like that. And trying to spread the risk, I suppose, in a way across different assets over time. But fundamentally, the portfolio to me would be the sustainable, substantial, kind of ground level wealth that is there all the time. And I suppose really that is broadly speaking how I see my direction of travel forever, really, to continue to build that wealth. From a strategy perspective, once I started to understand all this property stuff, what I really wasn't interested in, ironically, was buy-to-lets.
Right.
I sat on a few courses, and I'll be honest, I just thought, this is a bit boring and it's not for me. And that's a very, very personal opinion. I understand that. And I think probably as a person, I have got quite a big risk appetite.
Yeah.
So what I couldn't understand or get my head around for me is, and bearing in mind at this time in my life, I was very cash flow poor and I really needed to get some cash flow quickly. We were trying to sell the last flip. It just wasn't selling. And ironically, through all this training, somebody on one of the courses said to me, Sarah, why don't you turn this into a HMO? Like, it's not selling. Why don't you do something interesting with it?
Yeah.
And I just thought, okay, I could do. And so then I went as part of this training that I paid for, went on to the HMO course, learned all about HMOs, and then set up a really nice 3-bed HMO. So, there were some tweaks that we had to make to be able to make it kind of legal and compliant. But in the main, because we'd already done it all to sell on, like the property was finished. So we had to, like I said, do some little bits, put locks on doors and things like that. But generally speaking, the property was just about good to go. It already had 3 bedrooms. It had a shared bathroom. It had a lovely kitchen. Everything was new and modern. And I just put a fake ad out on Spare Room to see if I could generate any interest. And I got like 35 applications in about 2 weeks. And at that point, I thought, okay, this really does work. It would be silly not to do it. And then kind of as that was setting up, at the same time, I was thinking, well, I don't really get the buy-to-let thing, but this HMO thing actually really interests me, and I can see there's a lot of value in it. I felt it was a smart investment because it's buying one house, but maximizing the profit out of one house, as opposed to buying lots and lots and lots of houses and it taking a long time for me to generate high cash flow. And it just seemed like it was a perfect fit for what I needed at the time to kind of bridge that gap and get the cash flow in. And really it evolved from there. So obviously went from the 3-bed, and the 3-bed worked really, really well. And then we bought a 6-bed that was close by, and that was actually a 5-bed semi, and we did lots of renovation works to that, added lots of en suites, turned it into a 6-bed. And really that was how that evolved, because I could then see in action, that providing that I did the due diligence and that I understood it was in the right area and I'd tested demand, that property would rent really well by the room. Yeah. Suddenly I went from having a property as a buy-to-let that might rent for £1,000 a month to a property now that's making £3,200 a month for the same property, because I'd split it into six rooms. And in my mind, that just felt like a no-brainer, really. So HMOs really then became, I suppose, the thing for me that I just felt was what was going to take me forward, to be honest. And I think probably now what's also on the horizon is really kind of commercial to residential stuff as well. So I think, and again, this is because I like the idea of splitting units. It's a similar thing, so taking properties that are maybe old, dilapidated, old offices that no one's in, splitting them into 5, 6, 7 flats and then renting them out. Yeah. Because to me, the overarching strategy, I suppose, is maximizing profit from one property. For me, it just feels like a smarter way to work, to own less property but make more money from them, if that makes sense.
Less paperwork as well when you buy them.
Enormously.
And I think buy-to-lets make a good foundation for most people's portfolios. It's a good way to learn the conveyancing process. Mm-hmm. It's a good way to learn the buying process. It's a good way to build relationships with agents. It's a good way to look at smaller refurbs, and the rental model. It's not going to make you a millionaire overnight, but I think it's a really good way of cutting your teeth. And like they teach us on the property training, is make small mistakes, and then when you scale, you won't scale those small mistakes to the big mistakes. You'll scale all the fun stuff. And I guess you, like me, like a lot of other people, every project you do and every house you buy, you get a little bit more confident and a little bit bolder, and all that went well. and you go for something a bit bigger, and then that goes well, and it snowballs, and you scale up from there. So recently you've also started hosting the property breakfast as well. So does that sort of tie in with building your own profile and your own profile brand around property?
Yes. So the reason that the York Property Breakfast started was born out of a few other property breakfasts that already run around the country. So it's very much the most informal networking event you could ever imagine, which is why I like it. I've done lots of different networking, and in truth, a lot of it wasn't for me. Because what I was looking for was like a real straight talking, down the line, warts and all, everybody just round a table who invests, just being really honest about the situation, so that I felt less isolated, like it was just, it's not just, oh, it's just me that this is happening to. And and then to sit with other people who have got, like you think you've got property problems, some of these people that I've spoke to, I now feel like I can never moan again. Like it's frightening, like what some of these people are going through. But that's also just the joys and the funs and the ups and downs of property. So, but it did help me sort of feel a bit better. So I was looking for something like that, and I landed on Leeds Property Breakfast, and I've never looked back. No tie-ins or anything. I mean, literally just go sit around a table once a month if you want to go. If you don't want to go, you don't pay. It's really as simple and straightforward as that. And I just enjoyed this environment so much that I just thought, this is so sad that like it was only in Leeds, and there was one in London, and there was none anywhere else, and it was just so refreshingly different to anything that I'd ever been to before. And it's really helped me, and I just thought it would be really nice to mirror that somewhere else to help more people. That was really important to me. Like I just took a minute, I suppose, to just sit back and reflect on how much it had changed the way I felt, and how much better I felt, and the advice that had been given from other more experienced people than me in that room. For like, I don't know, whatever it is, 30, 50 quid a month, and you just turn up if you need to turn up and you want to have a moan, and that was really nice in a way. And just so different to anything that I'd ever done. And that's really how York Property Breakfast was born. So spoke to the guy that runs Leeds Property Breakfast, and he was just very much of, if you want to go do it, it's not something that anybody owns, it's just, something I run. And so in the last few months, that, pretty much since February, March time when I started it, that's kind of what I've been doing every month. And everybody gets together a Friday of the month, which is kind of pre-arranged in advance. Anybody's welcome. You just literally book it on the Meetup app, and like pay over the app and then turn up. There's free breakfast, tea and coffee, whatever you want, but it's just very, very informal, from one property investor to another. What's going on, can we help, what do you need help with, really? And it was just so invaluable to me. I just wanted to give that to other people, in essence.
So to give the property meet a plug, then when's your next meeting?
So the next meeting is actually not this Friday coming, the following Friday, so the 27th of May, from 9:30 till 11:30. And it is at the Marriott Hotel near York Racecourse.
Marriott Hotel. So what I'll do as well, for anybody who's listening who'd be interested in finding out more about the meetup, I'll put a link in the description so you can find out more about that. Now, property investing for me boils down to two things, and I call it the two wheels of the bike. And I'll have to credit Helen Roberts Lodge for that phrase. And the two wheels of the bike are finding the deals and finding the money to fund those deals, whether it be investors investing in you for a fixed return, or investors putting their money in and buying the deals. So you've talked a lot about the deals that you've got, and you've talked about building relationships with agents. Where else have you found your opportunities, and where else have you been looking, or what tips would you give people on where to actually find the properties to invest in? And then when you've answered that question, I'll move on to finding the money.
Fine. So in terms of finding the deals, I am a big believer in just talking to everybody, but in a fairly subtle way. So there's lots of people that I think take that message
Yeah.
and they go out and shout about the fact they're doing property, and it's borderline annoying. And I've been that person, you know, like someone said it to me, just go tell everybody, and I started to like bring it up in conversations where it was wholly inappropriate, when, you know, and I didn't get it at all. Thankfully I've now perfected that. So for me, I think just in general conversation, you know, and to me, it's never about me bringing it up. Somebody will ask what I do, you know, and I've had that quite a few times recently. In fact, the last 2 properties that we bought were both off market deals. One of those was just through genuine conversation, through a friend of a friend of a friend who needed some help, wanted the property off the hands, went round. I could see that it was going to work for us, and just kind of agreed an off market deal. The most recent one, which is an office block that we've bought, I wrote to them. So I sort of every 6 months or so do a couple of rounds of direct to vendor marketing. I have tried leaflets in the past. I didn't have a lot of success with that. But what has seemed to work for me is handwriting letters to people, which is a bit more effort, but I think people appreciate it more. It feels more personable, like you've taken the time to write to them. So I wrote to probably 30 odd people. Anyway, one of the gentlemen responded to me, and it took about 2 years to get this deal over the line. And I think that's why patience is key. So I had an initial conversation with him. He invited me to the offices, spoke to him for about 3.5 hours. He was quite keen to sell, but he said he'd have to speak to his business partner who he owned the building with. He then rang me a few weeks later and said, unfortunately, my business partner doesn't want to sell. So I kind of thought that was the end of the road. 12 months later, he rang me and he said, okay, now we both want to sell, and we only want to sell to you. You know, what do you think about doing a deal? So, you know, I think that off-market deals are often the best deals. I know lots of people say that, but you do have an advantage, particularly in this type of market where everything's completely nuts, because you are knocking out the competition. But, you know, they can be hard to find, and that there is a lot of work involved in an off-market deal, as you, Sam, will very well know. But the money's in it if you can find them, and that is a bit of a patience and a waiting game. I think, you know, like I say, so writing the letters, it might be a long time before they respond. You might not do anything at the time, you know, but then it came back around 12 months later. But I do think just speaking to people, you know, loads of people are in loads of different situations that you don't know about unless you talk to them, you know, and it's, you know, like you've said before, Sam, it's all about solving problems for people. You know, how can you solve the property problem? There'll be hundreds and hundreds of thousands of people sat there right now who genuinely can't afford the mortgage anymore after everything that's gone through COVID. They'll have lost the job. They'll be in very different situations to pre-COVID. That are genuinely probably too frightened to call the mortgage company, or they're too frightened to face up to the debts, or they don't know what to do. And, you know, if you can kind of hone in to find those people and genuinely help them with their situation, that's not a bad thing. I think you just need to remember that it's for you. You know, it's not just for you, it's to help that person. I think if you understand that piece about helping people, I think it comes a lot easier to you a lot of time.
Fundamentally, sourcing properties off market direct to vendor is about not sourcing properties, but it's about sourcing people. It's about sourcing people with a situation where you can give them a solution. And sometimes that situation might be that they want to sell the house and you do an off market deal and you pay full market rents if you can get the value out of it. But sometimes it might be that they want a quick sale and you can get a discount. But the key thing, and for people listening, is think about the person and think about the situation and think about what they need rather than the property. And if you can establish what they need and come up with a solution, invariably the property could form part of that. So that's super interesting to hear you say that. What was my next question going to be? So I guess it's about the money side of things. Yeah. So once you found the property and you've got the deal and you need to fund it, how do you find that, and how have you succeeded in raising investor finance?
Okay, so I think that there's a lot of nonsense in the market and in the industry about raising investor finance. And I think that a lot of people will say, which fundamentally I'm against, and this is just an opinion, you know, find the deal and the money will come. And I will tell you from experience, I found lots of deals and no money came.
Yeah.
Absolutely none. So that was my very early experience. And I thought, okay, Sarah, that's not going to work. And you can't rely on fate to buy you a property. So then I thought I had to take a much more pragmatic approach. And I spoke to some really long-standing big investors that were all over the UK, and tried to understand what they had done over time to practically raise finance. And there were a couple of things. I think the first big thing that definitely worked for me is everyone said charity starts at home. That is really true. The most likely people that are going to lend you some money when you don't know anybody and you're just starting out are your family or your close friends.
Yep.
And that is definitely what worked for me. So my parents had some cash and I had a bit of cash when we first started, which we all pulled together. But then the business very much kept going in the early days directly from my grandparents. They had quite a big pot, so they invested with us, and then through kind of it went a little bit larger, aunties, uncles, families, friends, etc. But I think you do have to wait that process out. You may land really lucky really early on in a lovely conversation with the world's biggest investor and life might be rosy, and that could happen, and I'm not saying it won't, but I think for most people there is a general path of immediate family, wider family, friends, and because don't forget as well is that this whole piece around raising investor finance is they have to know, like, and trust you. And that process takes a long time. There's a gentleman that I was speaking to recently that's just doing a really good project over Harrogate Way. He's building 15 new build houses, and the investor has given him like £1 million to buy the land to do the deal. And it took him 3.5 years of wooing this guy and taking him for dinner. And, before this guy even had a sniff of thinking, okay, I might do something. And for the first year, I don't even think they mentioned property. It was just, what you doing? How's life? So I think there's this whole process to me that has to sort of go on in the background. And I think that the more that you do that, the more doors are open, but it is over time.
Yeah.
And some people will be really upfront about that. We've had an investor recently that we've met who has kind of said, look, I'm interested in doing something, but I don't know you from Adam. Let's spend 9 months getting to know each other, and that process is really important. So I think kind of going out to people that first, that they trust you already, just being really honest about the conversation, how can we work together? I'll give you a return. I'll show you how it all works. Because then what you're doing in the background is, to me, building a small, nice, rounded portfolio to then showcase to bigger investors when that time's right. And so I think that's one way. The other way, which I've had some success with, particularly more recently, is kind of branding, profile, and exposure. So I really hate posting on social media, for anybody that knows me. Like, I really hate it. It's not my bag. If I had a choice, I'd delete everything and I'd go totally off grid. But I'm also very aware that that's not going to really work for my business. So I do have to keep it afloat. So I post probably at least 3 times a week. That's probably not that much. I know lots of people that do more, but I really try to post 3 times a week across all major platforms, whether that be Facebook, Instagram, LinkedIn's a really good one at the minute, Twitter, whatever. And just to get into that habit really of being seen, putting loads of hashtags on stuff so everything's property related and all the boring stuff that nobody wants to do. And that really can be anything, but you never know who's watching. And I think that lots of people think, oh, no one's liked my post. But I've had countless conversations with people that go, oh, that was a really good post, that. And I think, well, you never liked it, so that would have been nice. but they are clearly watching, and they do know what's going on, and they're taking an interest in the background, and you don't know who those people are necessarily at the time until someone says something to you. I just think as much exposure as possible. You can never get enough exposure. I've spoke at different events in the last few years, property related and non-property related, because you don't know who wants to invest. It doesn't have to be somebody else that likes property. And and I've had quite a lot of articles published recently. And the last article I just had published in the Your Property Network magazine, they did a feature. A guy called me off the back of that. I met him last week. Really nice guy. Spoke to him for a good couple of hours. And he just basically said, I think I really want to invest with you. Let's come back and meet again. We'll have a couple more conversations. But the point is, it's that exposure piece. But it's also taken me 6 years to get to that point where someone, because I have to have all the evidence. Okay, what other properties have you done? What other projects have you done? What can you showcase? Can you do it? Can't you do it? Yeah. So those things are all there, but I just think they're a real long game, and it's just about biding your time. The money will come, but definitely not after a deal. So please get the money first and then find the deal is my biggest piece of advice.
Yeah. I want to loop back on something you said, actually, because you were talking about telling everybody what you do without boring them. Mm-hmm. I wanted to sort of share some tips with the people listening. And it's kind of mainly around the psychology of selling. So you want to talk about your property business, okay? If you walk into a conversation and go, I've been doing this, that person's going to switch off. So what you could do is you could trap them, where you could sort of go, what have you been doing? So they go, well, I've been doing this. And then politely go, well, what have you been doing? But that can be a little bit obvious sometimes when you're just asking someone what they've been up to because you want them to ask what you've been up to. So my advice is, if you just have a conversation with someone and genuinely show an interest in what they're saying and ask them lots of questions, the conversation will at some point come round to you and what you're doing. So if you've been showing a lot of interest in that person, asking lots of varied questions, they'll be like, so come on, tell me about you. They've warmed to you because you've shown an interest in them. So their kind of like relationship score with you's gone up, where they think, do you know, I want to speak to this person more. And they'll ask you, so what do you do? I just do a bit of property. What do you do in property? And you almost get them to drag it out of you. And you get them asking you questions. And then you tell them what you do. And that's when they'll either be interested or they're not. And if they're interested, you could explore working together, or they might be an investor for you, or if they know, I've got someone who's got a property to sell, and you get those off-market properties. So I just wanted to share that kind of tip on how to manipulate a conversation and influence somebody to get across to them what you want to talk about without being so straightforward where you just go in like a bull in a china shop. And it's the same with the investor finance as well. If you come across as being desperate and pitching all the time, you're going to get a cold response. Whereas if you just make sure that it's dropped in the conversation at some point and you get all the key points across without being too forceful, that should leave enough of impression in their subconscious that 6 months, 9 months, whenever the time is right, they might think, oh, hang on, I might speak to such and such. Or they might know someone who wants to invest and then they can make an introduction. So some really good points. And it's interesting what you say about social media. I probably post too much on social media, but some people do find it tough. And just remember, the majority of people out there in your space aren't doing it either. So if you start doing it regularly, you will elevate yourself above people and get noticed quite quickly. So don't be scared of doing it. Congratulations on the magazine write-ups. That's a big thing, and that's a really good example of how doing something varied, not just doing a Facebook post, but putting something on LinkedIn, Facebook, Instagram, a magazine. You never know where people are going to see you in different platforms. I'm a big fan of using Linktree at the moment because then people can look at one piece of content and then find your other pieces of content, and they build that like and trust factor a lot quicker with you. So some really good points there. So what I want to ask you next is, you've been really successful in what you're doing. You've got a really good plan. So what are your goals for the next few years with your property investing?
Great question. I think for me at the moment, we are still very much in, for me, like growth and cash flow phase. Cash flow is king. I don't think you can ever have enough cash flow. I've got kind of my own set goals in my mind of sort of where I would like to be sort of 3 to 5 years from now from a cash flow perspective. And we do need to keep momentum up to kind of achieve where I would like to be.
Sorry.
Sorry.
Life out.
So, but it is fundamentally to keep growing the portfolio. I think in my own mind, I've always had, if I could have 100 of my own tenants, that would be my first goal.
Yeah.
I think then I will reassess beyond that, where I would like to be. I think probably some of my problem is I'm excessively ambitious. So, I'm never, ever satisfied. Nothing's ever enough. And I always just want to keep going. So, I don't know. It's endless, but definitely just to keep building the portfolio through HMOs, through sort of commercial to resi conversions, I think is where I kind of see that working out. I can't see any change. I'm quite happy with the way that that's working. And I kind of know, and I like the areas that we've been buying in, and I probably wouldn't change that. So very much probably similar to where I'm at, but just on a grander scale, I suppose, really.
Good stuff. What would you say have been your biggest lessons that you've learned over the years?
Okay, I think my single biggest lesson is you can do anything, but you can't do everything.
Oh, I like it.
And the reason I say that is because I spent a lot of time in my early days of property, because you get bombarded with so much information, you feel like you have to be doing all these things all at once. But the reality is, if you try and do all these things all at once, you only do a little bit of everything, and then you never become successful in anything.
Yeah.
Whereas if you just strip it right back and you tackle one thing at a time, whether that's, I'm just going to spend a year building my profile, and then the next year I'm just going to look for deals, and then the year after I'm just going to look for finding investment, whatever that is. Like you can't do it all at once. You have to get good at those things individually, and all those dots at the end will connect together, and you just have to have faith in that process, I think. But fundamentally, you can have anything you want. You just can't have it all at once. You need to build it up.
Yeah, and then you get consistency, I guess, if you concentrate on everything.
Massively.
And finally, for anybody who's listening who's just starting out in property, especially females, because obviously with you being a lady, it's a male-dominated industry. So especially if there's any females just starting out, thinking about a career in property, maybe put off by thinking it's a male-dominated industry, what tips would you have for those people who are just starting?
I think, I think probably just to your point, Sam, it is a very male-dominated industry, and I found that out very, very early on. And I think the thing that's really kind of carried me through was, first of all, just know your stuff. Like if you're going to go meet a builder or, estate agent or whatever that is, go and do your research first. Make sure that you understand, so you're not going to get outpriced by the builder. I've had it where I've turned up, and they've looked at me, they think I'm a girl, so I've got absolutely no idea what I'm talking about. And I know in my mind that the work's 25 grand, they're quoting me 60. Yeah. I know the way off, but they think I don't know anything. So kind of having that knowledge, and that comes back to that piece about, having a mentor or doing some property training, because that provides that safety net, I think, to be armed with the knowledge before you go into the fire, if that makes sense. And then getting into that space where you do know, and that you're not going to, no one's going to make a fool out of you, because you've got that confidence in the background to be able to competently challenge. I think that's really, really important. And also just standing your ground. Like don't be afraid to stand out. Even though I'm very aware that I'm in a male-dominated industry, it actually doesn't bother me at all. I quite enjoy the fact that it's a bit different when I turn up, because people think, oh, there's a woman investing in property over here, and there's another 85 men in the room. But just be true to yourself. No, just definitely get some knowledge behind you, so you don't get ripped off. I think that's really important in the early days, whether it's just asking advice from some other investors, like I say, or having a one-off session with a mentor, or getting a real property mentor longer term, or getting some coaching, or attending some training courses, whatever that looks like. Just be patient, get the knowledge, and then be armed so that nobody can pull the wool over your eyes, I think, is probably one of the most important things.
Yeah, good points, some good points. So anybody listening to this who wants to get in touch with you, what's the best place to find you?
A few different places. Well, I'm just Sarah Flynn on any social media platform you can possibly think of. So I'll turn up on that. If you want to contact me directly, you can contact me on my email, which is sarahflynn@kafproperties.co.uk. Or you can visit either of my websites, which is www.kafproperties.co.uk or www.sarahflynnofficial.co.uk.
And what I'll do as well is I'll put those websites in the comments so people can find them.
Thank you.
Sarah, that's been a brilliant conversation. Awesome guest. Thank you for your time. And you have been listening to the Evolution of a Property Business podcast, and I will see you in the next episode.
Thanks, Sam.
Thank you for listening to the Evolution of a Property Business podcast. We hope you enjoyed the show.